This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Output increases from oil producer group OPEC Plus are not leading to higher inventories, showing that markets are thirsty for more oil, ministers and executives from OPEC nations and bosses of Western oil majors said on Wednesday. OPEC Plus, which pumps about half of the world's oil, has been curtailing production for several years to support the market. But it has reversed course this year to regain market share, and as U.S. President Donald Trump demanded the group pump more to help keep a lid on gasoline prices. OPEC Plus began to unwind cuts of 2.17 million barrels per day in April with a production boost of 138,000 barrels of oil per day. Hikes of 411,000 barrels of oil per day followed each month in May, June and July.
Oil prices were steady on Thursday as investors weighed the potential impact of U.S. President Donald Trump's tariffs on global economic growth, while a weaker dollar and signs of strong U.S. gasoline demand underpinned prices. Brent crude futures were up 4 cents at $70.23 a barrel by 0600 GMT. U.S. West Texas Intermediate crude fell 1 cent to $68.37 a barrel. On the demand side, macro uncertainty has led to a more cautious buying environment, particularly in Asia, said analytics firm Capella in a note, while noting that geopolitical risk premiums have faded with the Israel-Iran ceasefire holding.
Moving on to the top news in the energy sector.
America's largest power grid is under strain as data centers and AI chatbots consume power faster than new plants can be built. Electricity bills are projected to surge by more than 20% this summer in some parts of PJM Interconnections territory, which covers 13 states, from Illinois to Tennessee, Virginia to New Jersey, serving 67 million customers in a region with the most data centers in the world. The governor of Pennsylvania is threatening to abandon the grid. The CEO has announced his departure, and the chair of PJM's board of managers and another board member were voted out.
Utilities across the European Union cranked output from natural gas and coal-fired power plants during the opening half of 2025, boosting power sector emissions and reversing recent energy transition momentum. The upswing in fossil production follows 2 years of steep declines in fossil use within the EU, which established Europe as a global leader in efforts to curb reliance on polluting fuels in power production. However, year-on-year drops in output from wind farms and hydro dams deprived EU utilities of key sources of clean power during January to June, and forced them to compensate with sharply higher generation from fossil fuel plants. Next, we have the top news in metal markets. Gold prices rose on Thursday, supported by a pullback in the dollar and the prospect of U.S. interest rate cuts later in the year, while investors awaited more details on U.S. President Donald Trump's trade policy. Spot gold was up 0.5% to $3,328.23 per ounce by 0916 GMT. U.S. gold futures gained 0.5% to $3,336.90. The passing of the One Big Beautiful Bill, unsettling trade, policies, and rate cut expectations should be dollar-negative kind of events. Gold should be favored in that environment, said WisdomTree commodities strategist Nitesh Shah. The U.S. dollar index eased 0.2% against its rivals, making gold less expensive for other currency holders.
U.S. copper prices rebounded on Thursday after U.S. President Donald Trump said a 50% tariff would start on August 1st, but held below their record peak due to a glut of metal already in the country and uncertainty over details. Trump signaled on Tuesday that he was imposing fresh tariffs on copper. He confirmed that and announced the date on Wednesday. The most active COMEX copper futures contract was up 2.1% to $5.60 per LB at 0945 GMT, down from a record high of $5.90 touched on Tuesday.
We will now look at the top news in the agricultural sector.
Chicago corn futures slid on Thursday, falling for 3 out of 4 sessions, while soybeans lost more ground as forecasts of crop-friendly weather in the U.S. Midwest boosted prospects for both crops. Wheat slid for a fifth consecutive session on harvest pressure. For corn, we have bearish weather, which is limiting any upside we have seen in prices, said one agricultural broker. Wheat is also under supply pressure, given the harvest progress. The most active corn contract on the Chicago Board of Trade fell 0.5% to $4.13 minus 1/4 a bushel, as of 0159 GMT, and soybeans slid 0.1% to $10.06 minus 3/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.